We'll begin with non-banking finance companies, NBFCs. 1 minute. Before we begin with NBFCs, what is the difference between a banking company and a non-banking finance company? NBFCs are registered under Companies Act 1956, of course 2013 now. Banking companies, of course, registered but governed by your RBI rules. If you look at the main differences, demand deposits. What do you mean by demand deposits? Can you open, for example, an SBI account with SBI, ICICI? Yes, you can do. Can you open SBI account with Manappuram Gold Loan or Shriram Finance Corporation? No, not allowed. Okay, that is the main difference. And if you look at issuing checks, can SBI issue checks? SBI checks can be issued. Can Manappuram Gold Loan or Shriram Finance Corporation can issue? No, not allowed. Then what about clearing system? Banking companies are part of clearing mechanism like NEFT, RTGS clearing mechanism, but NBFCs are not part of that particular system. If you look at DICGC cover, okay, Industrial Credit and Guarantee Council coverage, for the loans given by banking company, it is available. For NBFCs, the things are not available. So what are these NBFCs? Simple. They are not doing core banking. What do you mean by core banking? That is like business banking services, current account, savings account services, they don't do. Other than that, they are doing it. Clear? Take up this. This is the difference between a banking company and which one? NBFC. Then we'll proceed further. See, for the purpose of creating provision for bad debts, for the purpose of recording, we classify the NBFCs into two categories. Number one, NBFCs which are allowed to accept deposits. What do you mean by allowed to accept deposits? You can get fixed deposits. You can get which one? Fixed deposits where your asset size means your net worth, net capital will be what? 500 crores, that is more than 500 crores. If your net worth is less than 500 crores, then you are not allowed to accept deposits. So accepting deposits, that is the first category. Second one, NBFC is not accepting deposits can be two category. SI means systematically important. SI means systematically important. Non-SI means not systematically important. Not systematically important. What is systematically important? Your asset size is what? More than 500 crores. Equal to or more than 500 crores. Non-SI is less than 500 crores. This classification is done by RBI to maintain proper provision for bad debts, capital adequacy norms, all those things. Take it up. SI is systematically important. SI means systematically important. Non-SI means not systematically important. Done. And with respect to NBFCs, they have to maintain this net owned funds, minimum adequacy net owned funds they should maintain. Okay, as per RBI norms, they should maintain what? Net owned funds. Start. Computation of net owned funds. How to calculate net owned funds for NBFC? Okay, this format is of course given by your RBI. According to that, we are doing it. Start. Paid up capital. Preference share capital. Add free reserves. Add free reserves means all the general reserve, P&L account, all these things. Add securities premium. Add capital reserve. Other than revaluation reserves. Capital reserve other than which reserves? Revaluation reserves. Less profit and loss account debit balances. All the fictitious assets. Example of fictitious assets. Do you remember in company accounts, we used to write off preliminary expenses, underwriting commission, all those things. And less all the intangible assets. This will give us gross owned funds. Less investments in subsidiary companies, shares, debentures in excess of gross owned funds. In excess of 10% of gross owned funds. All these norms are given by RBI. We are nothing to discuss over here. This will give us net owned funds. And this computation is tested directly as a direct question in the exam. They ask you as a direct question in the exam about calculation of which one? Net owned funds. Why this is calculated? NBFCs are asked to maintain a minimum net owned funds. We'll do a question based on that. Take your study material. Look at this question. Page number, I hope, 138. It's a direct question for about 10 marks in the exam. You can 10 marks. This was asked for 10 marks. Only make it a very simple question for 10 marks. You're going to try it. நீங்க தான் ட்ரை பண்ண போறீங்க. ட்ரை பண்ணுங்க. paid up capital just on the format la fill up பண்ணா போதும். Okay, paid up capital, free reserves எவ்வளவு இருக்கு? Any securities premium? Any capital reserve? Any fictitious assets like deferred revenue expenditure? Yes, deferred revenue expenditure is there. Any intangible asset? This will give us gross owned funds. Investment in shares and debentures exceeding what? Gross owned funds. Investment in shares, how much is given? 100. Investment in debentures, how much? 100. Total 200 less 10% of gross owned funds. 400 into 10%, 40. Excess எவ்வளவு இருக்கு? 160. 200 minus 40, 160. So this is tested for 10 marks. It's a past asked question, repeated question in the exam. The past repeated question in the exam. Systematically important non-deposit banking company or deposit taking company doesn't matter for us. So this is how we work out which one? Net owned funds. So in NBFC, the one area of questioning is this one, computation of which one? Net owned funds. Shall we proceed? Done. This is the first area which can be tested in the exam. Second area is going to be how to create provision for bad debts. Adagadi provision for bad debts. This depends on how the assets are classified. This is classified into for systematically important NBFCs and non-SIs. What is a systematically important NBFCs? Your net worth will be greater than, net assets will be more than 500 crores. It is less than 500 crores. Standard asset. It is same like a banking company. This is also applicable for deposit taking NBFCs also. Okay. Standard asset. What is a standard asset? Up to 3 months. Up to 3 months, it will be called as which one? Standard asset. Non-SI, up to 6 months. Up to 6 months overdue, it will be called as what? A standard asset. Wait pannunga. What is the provision required is? Do you remember banking company, what is the provision required? 0.4%. 0.4%. Okay. Non-systematically important, 0.25%. 0.25%. This is like a bank. Depositing in NBFC is treated like a bank. That's why 0.4% provision is created, 0.25% provision for others. Take it up. Up to 12 months. Up to 12 months overdue, it will be called as what? Substandard assets. Substandard assets. 10 provision will be required. Here it will be up to 18 months. 10% provision is required. C. Doubtful assets. Doubtful assets more than 12 months. This will be more than 18 months. So more than 12 months it remained outstanding. That will be called as which asset? Doubtful assets. This we classify into unsecured portion. Do you remember? Unsecured portion, how much percentage you will create? 100% you will create. B. Secured portion. Do you remember? Up to 1 year, up to 3 years, more than what? 3 years. But the provision is little different. 20%, 30%, 50%. I hope 100% create pannum, but here 20%, 30% and what? 50%. That is for which portion? Secured portion. If you look at SI and non-SI makes a difference only in this. 0.4% and what? 0.25%. Other than that, all the other provisions are same. You remember one more asset we will classify, loss assets. Loss assets means the banking company has decided that investment is totally lost, it is irrecoverable. It is irrecoverable. Identity of the asset is lost. Now, how much provision you will create? 100% provision you will create. Take it up. This is similar to which one? A banking company. This is similar to a banking company. Based on this also a question can be tested. Shall we? The only difference between SA and non-SA is what? The 0.4% and what? 0.25%. No other difference. No other difference. Unsecured portion, irrespective of number of years, you have to create what? 100%. Secured portion only we classify up to 1 year, up to 3 years, more than 3 years on the market. Loss assets now you have to create what? 100%. Shall we? Come to question number 2. Question number 2. Solve it in the material itself. Does not waste time. You can solve it in the material itself. Standard assets, how much provision you have to create? SI, non-SI. SI means 0.4%, non-SI 0.25%. You multiply and take it directly. Substandard assets, both 10%. Both 10%. Doubtful assets up to 1 year. We assume that it is a secured portion. Okay, secured portion is given. Up to 1 year, eவ்வளவு percentage? 20%. Up to 1 to 3 years, 30%. More than 3 years, 50%. Unsecured portions, 100%. Loss assets also, 100%. Calculate and total the amount. Just calculate and total the amount. What is the total you get? For SI, 452.2. For non-SI, try question number 3 also. But if that is not given, you work out for both. Because only one difference, and the 0.4, 0.25 only different. Other than that, everything is same.
4.4, 854.
How much?
90 SI to 904.4, non-SI to 854.
This is for SI. Shall we? Look at question number 1. This one, you need not create provision. You have to just classify the assets. Just read the question, then you will understand. Read the question full. You try to classify. Look at the last 3. Classify the assets of the company in line with NBFC systematically important non-deposit taking company. First, you have to see systematically important and which one? That is systematically important non-finance taking company, non-deposit taking company. This was also a 10 marks question. You have to just classify. What is the total loans and advances? 200 lakhs. So listen, when I classify, I have to classify the loans and advances. A, standard asset category. Then B, C, what is the total of all these things? 200 lakhs. I've already given you the how to classify the provision based on how many months I've given for SI and non-SI. Try to work out for SI. Systematically important. Maybe first alone, let me tell you other things you can work out. 200 accounts, last 2 months, amount due, overdue, how much? 40 lakhs. It is for how many months? 2 months. It will be classified as standard assets. So, in the 200 accounts, up 2 months, full amount 40 lakhs. Then 24 accounts for how many months? 3 months. Even that will be classified as which one? Standard asset only. How much? 24 lakhs. Then what is the next one?
For more than 30
10 accounts is for more than 30 months. Amount overdue how much? 20 lakhs கொடுத்திருக்காங்க. Doubtful assets ன்னு சொல்ல. We'll see. We'll see. Further explanation would have been given for this. For the 10 accounts, we'll hold it overdue for more than 20 lakhs கொடுத்திருக்காங்க. Then 4 accounts are due for more than 3 years. 2 lakhs, 20 lakhs already has been identified as which one? Substandard assets. Already identified பண்ணியாச்சு. It's more than 3 years. It will come under what? Doubtful assets. 4 accounts due for more than how many years? 3 years. எவ்வளோ amount? 20 lakhs. One account of 10 lakhs which has been identified as what? Non-recoverable means loss asset. How much? 10 lakhs. Then this out of the 10 accounts overdue for more than 30 months, 6 accounts have been already identified as which one? Substandard assets. See, and out of the 10 accounts, okay, total amount is how much? 10 accounts of the total amount is how much? 20 lakhs. அதில் என்ன பண்ணியிருக்காங்க? 6 how many accounts? 4 accounts. 6 accounts. Substandard identify பண்ணியிருக்காங்க. எவ்வளோ? Balance will be considered as doubtful. எவ்வளோ? 14 lakhs.
And other are identified as substandard asset for a period of less than 14 months.
Oh, 6 lakhs is for more than 14 months. Upon the 6 lakhs will be called as which one? Doubtful assets. Balance can be called as substandard. That's it. Take it. Add and see. Total, is it coming to 200 or Papa? Only 114 comes in. But what is the total loads? So if nothing is given, balance information not available. Standard asset set. $86. This was also asked for 10 marks. You have to just classify. Shall we? If it is non-SA, also the same classification will come in this question. The up to 2 months standard, up to 3 months standard, balance information also it will be there one. Balance it will be the same. There will be no difference.
Core account substandard 14 lakh இருக்குல்ல சார், அது 14 months தானே it is outstanding. So non-SL up to 18 months.
Maybe this will become standard asset. The 4 assets, this also will become up to 18 months. It is called as which asset? Substandard asset. That is also substandard asset. There will be no change in that. No. Even up to how many months? Look at this.
Up to 6 months வரைக்கும் தான் standard.
Up to 6 months. More than up to 18 months. Beyond 6 months, up to 18 months, it will be called as what? Substandard asset. So it will not make a change in that. Shall we? At the heading, provisioning norms for NBFCs involved in hire purchase and leasing business. Let me to go with an example so that you will understand better. Okay, let us assume on 1/4/2000, okay, on 1/4/2022, okay, 1/4/2020, A Limited sold, A Limited sold maybe NBFC finance NBFC financed a customer as follows. He has to make a down payment. He has to make a down payment of rupees 10,000 plus 60 installments. 60 installments of 5,000 each. So this will make to 60 into 5,000 will become 3 lakhs. What is the total amount? 3,10,000. This is the total amount recoverable from the customer. Cost of the asset. Cost of the asset is 2,50,000. Cost of the asset is 2,50,000. For convenience sake, let us take this as okay, 2,50,000, not a problem. Will come a fractional answer. Cost of the asset 2,50,000. The customer has paid all amounts due up to 31st March 2023. 31st, okay, December 2022. On 31st March 2023, 3 installments are overdue. Three installments are overdue. How to create provision? How to create provision? Okay, there are 2 provisions we have to create. There are 2 provisions you have to create. One is called as normal provision. Let us learn that, because I would have taught you the, theory, but you may not be able to follow. That's why I'm taking an example and doing. Okay, take the amount overdue. Take the amount overdue, that is installments due but not paid, for which you have to create full provision. What is how many installments due but not paid? 3 installments into 5,000. How much? 15,000. Then installments not fallen due. So why installment not fallen due also you consider? Because already 3 months overdue. What about future installment? Will he pay? It is doubtful. So installment not fallen due also you have to take it. Simple. When it was sold 1/4/2020. Okay. Till 31st March 2023. How many years over? 2021, 21-22, 22-23. How many years over? 3 years over. 3 years over na. 3 into 12. 36 installments already due. What is the total installment? Not fallen due. Not fallen due. 60 minus 36. 60 minus 36 and 60 minus 36. 24 installments. 24 installments not fallen due. We create a provision for that also. What is the reason? The customer has not paid the past, he will not pay the future also. And it's required as per your NBFC norms also. 24 into 5,000. 24 into 5,000. How much? 1,20,000 less finance charges on installments not fallen due. What do you mean by finance charges? Nothing but interest. Nothing but which one? Interest. What is the interest in this example? In this example, what is the interest? Cost of the asset is 2,50,000. Total amount recovered from the customer is 3,20,000. Total interest பார்த்தீங்கன்னா 3,20,000 minus 2,50,000. This is the total interest included in all the installments. Otherwise, the customer pay everything. The bank will earn an interest of 70,000. 3,20,000 minus 2,50,000, 70,000. Not the entire 70,000. Finance charges on the installments not fallen due. Simple. For 3,20,000, if interest is how much? 70,000. For 2,50,000, that's not for 2,50,000. For 1,20,000, how much? Sir, why are you eliminating this? Why are you eliminating this? Because this installments have fallen due or not fallen due? Not fallen due, so that interest should not be recognized. That's a principle. Cross multiply in this case. 1,20,000 into 70,000 divided by 3,20,000. What is the amount you get? 26,250. This we have to eliminate.
70,000 by 60 installment per installment interest into 24 கூட போடலாம்.
That also, no, but here there is a down payment also, There is a down payment also involved. There is a down payment. In this also some portions would have been there. So some proportions would have been different. That's why. So 26,250 you eliminate. 26,250 you eliminate. Then less book value of the asset. Book value of the asset depreciating at 20% SLM. Depreciating at 20% SLM. This is as per banking norm we are doing. What is the cost of the asset? 2,50,000. What is the depreciation? Depreciation now 3 years over already. 2021, 21, 22, 22, 23. 3 years over. So depreciation will be 2,50,000 into 20% for how many years? 3 years time is over. So what will be the book value of the asset? 1 lakh. 8,750 is the normal provision required. So let me explain the normal provision alone. Now in theory, how to calculate normal provision? Amount overdue. Consider which one? Amount overdue. Installments not fallen due. It will fall due in the future. Finance charges on the installment not fallen due should be eliminated. Less what? Book value of the asset, depreciating them at what? 20% SLM. This will give us which one? A normal provision required. Please remember, this is for which one? NBFC. Which is involving in hire purchasing and leasing. This is a normal provision. Apart from this, we have to create which one? Additional provision also. I will come to that later. Take up this.
Copy. Amount overdue credit savings.
Amount?
Amount already overdue on credit savings. Finance check and
See, income can be recognized on what basis? Accrual basis. So this includes interest also. We are just creating a provision including that interest.
installment not for due.
Installment fallen due, this interest is not due within the current year. It is due in the future. This amount is due in the future. Or this 1,20,000 includes 26,000 duty that will fall due in the future. But whereas this 15,000 includes both principal and interest already accrued and receivable. Shall we? Shall we proceed, friends? Okay. Once again, I repeat the normal provision. Okay. Amount overdue, due but not paid is only for how many months? 3 months, so 15,000. This includes principal plus what? Interest portion. Installments not fallen due means it will fall due in the future. Already 3 years time is over. So installments not fallen due is 24 installments. So for that 1,20,000 amount. Finance charges on the installments not fallen due, you eliminated. Then cost of the asset minus depreciation at the rate of what? 20% SLM. Then normal provision required. Next, additional provision. Depends on HP or lease installments and how much percentage of provision you require. Overdue up to 12 months. Overdue up to 12 months. Percentage of provision is nil. In this question, it is overdue for how many months? Installment was paid up to 31st December 2022. How many installments are overdue? Only 3 months it is overdue. Only it is 3 months overdue. If it is overdue up to 12 months now, what is the provision required? Additional provision required is nil. So in this case, you will create only which one? A normal provision. You will create only a normal provision. Okay. B. More than 12 months. More than 12 months and up to 24 months. 10% of net book value. Don't misunderstand. Book value means book value of the asset. 10% of net book value we have to calculate. C. Take it up. We can take it up along with me. Take it up along with me. More than 24 months and up to 36 months. 40% of net book value. 40% of net book value. More than 36 months. More than 36 months and up to 48 months. 70% of net book value. 70% of net book value. More than 48 months. More than 48 months, we need to create what? 100% of net book value. Sir, what do you mean by book value? Or what do you mean by net book value? Installments overdue, add installments not due. That means it will fall due in the future, less finance charges. This is how you have to work out. This is called as which value? Net book value. This is nothing to do with the asset sold or asset financed. This is based on book value of the loan. Book value of the loan on the market. So interest can be recognized on accrual basis if installments are due up to how many months? 12 months. If it is more than 12 months, then you can go for which basis? Same like NPA. Okay, in banking company, interest on NPA is recognized on what basis? Cash basis. Same method. See, for the last problem, for the last problem when we work out, what is installment overdue? 15,000. Installments, this one, 1,20,000 வரும். This will be 26,250 minus normal provision will give us net book value. This will give us which one? Net book value. For the purpose of creating provision, this is called as what? Net book value. Wait பண்ணுங்க. We don't create a provision for the last question. Why? It is overdue is what? Up to 12 months, no provision, no extra provision required. Only a normal provision is required. No additional provision is required. Shall we? We'll see an examination question based on this. Question number 4 part. This also we'll multiply and solve it in the material itself. LCD televisions up to eவ்வளவு months? 12 months. What is the provision required? No provision required. Washing machine? 24 months. So up to 24 months, what is the provision required? 2410 into எவ்வளவு percentage வரும்?
40%.
Up to 24 months. Up to 24 months, எவ்வளவு provision?
10%.
10%. Then refrigerators 30 months கொடுத்திருக்கான். So up to 36 months, what is the provision required? This into 40%. Then for air conditioners, 45 months, what is the provision required? 70% provision required. Multiply பண்ணி add பண்ணுங்க over. We are not bothered about interest amount. And suppose if there is a question on interest, recognition of interest, this 480 can be recognized on what basis? Accrual basis. This 480 can be recognized on what basis? Accrual basis. All the other things will be recognized based on what? Cash basis. Suppose if they ask you questions. Here they ask you to calculate which one? Provision to be made now. Suppose if they ask you to calculate which one? Interest to be recognized, then 480 will be recognized on accrual basis. Other things will be recognized only on what? Cash basis. So net book value into 10% and the more. Net book value into 40%. Net book value into what? 70%. Shall we proceed பண்ணலாமா? What is the total you get? 1 1206. This one we have done, net own funds we have done. This you can work out, past ask question now. First one nil, second one up to 20 months, எவ்வளோ percent provision? 10%, 32 months, 40%, 45 months, 70%, more than 48 months, it will be 100%. Here also, if there is a question about recognition of interest, 960 will be recognized on accrual basis. Other things will be recognized on what? Cash basis. This is asked for, I hope, 5 marks in the exam. What is the total?
2741.6.
Next question, of course, the same style. That you can work out. This will be just percentage மட்டும் போட்டுங்க, not even work out. 0.4%. Next one, 10%. This will be that you need not work out. Just mention the percentage alone. Just mention the percentage alone. This one is same style question. Okay. This one nil. 24 months 10%. 30 months. How much it is? 40%. For 45 months, 70%. More than 48 months, so it is 100%. Just mention the percentage alone. No need to do this. This is a past asked question, November 2020 question. It is only the amounts are different. அங்க 200 lakhs, it is how much? 600 lakhs. Okay, 300 accounts, last 2 months overdue. This will be called as which one? Just mark it, standard assets. Standard assets. The 64 lakhs will be called as, I hope amounts are only 3 times multiplied. 20 accounts more than 30 months, amount overdue is, I mean, how much is given? 150 lakhs. For this information will be available later. Then in that one account 40 lakhs has been what? Identified as non-recoverable, and it will be called as what? Loss asset. Loss assets. Out of the 20 accounts overdue for more than 30 months, 16 accounts has been already
For more than 14.
that will be called as what? Substandard assets. The 28 lakhs on the substandard assets. More than 14 months.
More than
14 months not out.
14 months doubtful asset.
Systematic or non-systematic?
ரெண்டுமே கேட்கும்.
Systematic.
Systematic one.
Systematically important. So up to 12 months it will be called as what? 12 months substandard. More than that it will be called as what? Doubtful. Then other assets are, which remaining will be called as what? Substandard assets. So what is the total amount overdue for the 30 accounts? 120 lakhs irukku. In that 120 lakhs, 28 lakhs will be called as what? Doubtful assets. Remaining will be called as what? Substandard assets. That's the same what we have done. Okay, shall we do this in the class itself? Question number 1. This we can do it in now itself. Start. This is for question number 1. First, which accounts? On the 300 accounts, 2 months. What is the amount due? Then 48 accounts for 3 months. Those standard assets are 64 lakhs. Balance information அப்புறமா வந்துக்கலாம். Irrecoverable. Any accounts due for more than 3 years? 4 accounts more than 3 years. How much amount due? 60 lakhs. 20 accounts more than 30 months. 16 accounts are already identified as how much? 28 lakhs. Doubtful assets more than 12 months, 14 months. அதில் எவ்வளோ இருக்கு? 20 accounts. Total amount overdue is 120 lakhs. 20 accounts le, what is the total amount overdue? 120 lakhs. In that, how many assets are identified as doubtful? 6 accounts are identified as doubtful. For how much lakhs?
16 accounts.
16 accounts doubtful. எவ்வளோ இருக்கு?
28.
28 lakhs. So, இதில் 16 accounts doubtful. Okay. 16 accounts doubtful. For how much? 28 lakhs. Substandard assets and the balance 4 accounts substandard. 92 lakhs. Then loss assets, non-recoverable 40 lakhs. No balance. What is the balance? 166. This is same like the question that we have seen already. Or okay.
The 4 types of questions தாண்டி வேற மாதிரி கேட்க முடியாது. Okay.
NBFC there are only first one is net owned funds. Second is creating a provision for bad debts. Creating a provision for bad debts for hire purchasing and leasing companies. Then finding out the classification of loans and advances. There is one more area which is rarely tested. Maybe in the last 10, 20 years, only once they tested how to classify the investments and how to value the investments. They may ask in theory, they ask for. We'll see. Edringla, have you taken up this? Done. Next question. Vikash Finance Company, a non-banking finance company. The balance sheet is given to us. It is in the similar lines, I hope. Okay. So first let us work out gross owned funds. Materially work out panninga. Just 250 plus free reserves 1250 minus என்ன பண்ணும் miscellaneous expenditure, deferred revenue expenditure 500. Any intangible assets you have to eliminate. Any intangible assets? No. So this will give us gross owned funds 1250 plus 250 minus 500 1000 வரும். Investments பாருங்க. Investments in shares of subsidiary company in debentures 275 plus 225 வருது 500 minus 10% of 1000 minus 10% of 1000 100 இருக்கும். அந்த excess you have to remove. இல்ல 400 remove பண்ணணும். remove பண்ணதுக்கு அப்புறமா வரதா 600 தான் net owned funds. Investments in excess of 10% of gross owned funds you eliminate, you will get net owned funds 600. Eliminate 400, you will get what? 600. Paid up equity capital plus free reserves minus miscellaneous expenditure will give us gross owned funds 1000. Investment in excess of 10% of gross owned funds you have to eliminate, so that you will get which one? Net owned funds. So this is the learning, this is a revision of the exam kaga. Nothing else. Then other getting investments. The board of directors should decide whether it is a long-term investment or which one? Short-term investments. No principal is given for long